Well, we're going to take a look at some new information that just came in off of the wire. This time it's our ethanol production numbers and hot off the press. I want to read these off for you here so we are all updated. So last week, the U.S. production came in at 1.062 million barrels per day. Now, that was a little bit higher than the previous week. It was up by 13,000 barrels per day. Now, if you look at the 4-week average, it didn't change very much. It slid by about 3,000 barrels down to 1.072. That'd be for your monthly average. The bearish thing about it is the ethanol stocks increased by 800,000 barrels, and they're back up to 24.4 million. So that would be a negative factor there. Imports, however, remained at zero. Now, I did note a little bit ago that we had a big sell-off in the crude oil market, and so while the ethanol inventories didn't change all that much, let's take a look at what West Texas crude is right now. Remember how it had been like $1.50 higher? Well, not anymore. Now it's down 20 cents. We're at 72.04. Actually got a low of 71.66, and it's bounced off of that just a little bit, but wow, they took the air out of that balloon in a hurry. Okay, I wanted to take a look now at our grain trade. Let's go to the corn. Our quotes are from Bar Chart, and we have the March contract just a half-cent higher at 4.59 3/4. This thing's been treading water all day. December now down 3/4 at 4.92, so it's not doing too much of anything either. Soybeans started out on a very weak note. They tried to come back a little bit, and now they're kind of faltering again. You have March now down 9.5 at 12.39. Still about 4 cents away from our earlier low this morning. And you currently have July in there 9.25 lower this morning. If you look at new crop November, well, if you want to do any hedging out there, it's priced at 12.03, and that's down 5.5 cents. It did go down and test that $12 benchmark, and it held. So let's look at wheat. In Chicago, March is down a half cent at 6.09 It had been down, gosh, about a nickel, and it came back somewhat. In Kansas City, you have March down 2 at 6.25. We're off of our earlier low by about 7 cents now. And in Minneapolis, you have March down 3/4 at 7.04 3/4. In the cotton trade, we have the March contract 66 lower at 80.07 per pound. So that's toward the lower end of the trading range today. We're only 6 points away from it. Well, with all that data thrown out there and a look at all those market prices, I want to bring in Brian Hoops of Midwest Market Solutions and get his thoughts on all this. So a big sharp nosedive in the energy markets there. Ethanol numbers are out, Brian. They seem to be pretty benign, not too much market impact there. Overall, it's like the grain markets are just kind of going to sleep ahead of the reports on Friday.
Good morning, Marlon. Yeah, exactly right. Very choppy markets in here and really directionless. The EIA numbers that you mentioned, production increase for ethanol, which is a good sign, and we may see the USDA slowly increase some of their ethanol demand in subsequent supply and demand reports, but ethanol stocks did hit an 8-week high as well. So while they're producing a lot more ethanol, we're not using it quite as quickly. So our stocks are starting to build up, and that's a little concerning longer term. But I think you really have to be careful in watching these markets in here. You had an outside day in corn. It doesn't mean anything. You have people talking about maybe beans are building a base of support ahead of this report. And again, probably doesn't mean anything because it's a technical action, and you're going to have major fundamental news on Friday that's going to change everything dramatically anyway. So that those technicals this week, you just have to kind of ignore them, throw them out the window. It's going to be focused on what happens with South American weather, production, and then U.S. numbers as well. And so, you look at that corn quarterly stocks number, it's over 12 billion bushels. It's 1.2 billion more than a year ago. It's a huge amount of corn that we have to shift through compared to year ago levels. And that's why this corn market continues to struggle, is because of that big stocks number that's carrying over this market. And how do we get rid of those stocks?
Well, and I'll just ask you this real quickly. The military actions between Ukraine and Russia are increasing again. And it makes me think of back when that war first started, how that really rallied the grain markets, just on the thought that there would be a shortage of supply coming out of the Black Sea region. Do you think we could get back to that again?
I don't think so. I think the market's very desensitized to it. You hear about more of these conflicts going on and things happening, and you look at the way the market reacts and it just ignores it completely. It's kind of been desensitized. We had a huge overreaction to it 2 years ago when it started. This war continues to drag on, and we have not really seen any improvement as far as U.S. exports go whatsoever. China, instead of buying corn from the Ukraine, and that is the number one source that China gets their corn from, they ended up buying out of Brazil this year, and it looks like they're going to have a plentiful crop in Brazil again, as well as in Argentina, that they can draw off of if they need to. So I don't think we're going to see a lot of benefits from this war like we had anticipated a couple years ago.
Okay, we'll return in a moment. We'll take a look at the cattle and hog market activity here on a Wednesday. Our guest, Brian Hoops, will be right back.